What's up? How you guys doing? Happy Friday.
Doing
Good to
good.
see you. Yeah, you wanna? I was gonna unmute you, but you already have that option. So, you had a good week, didn't you?
I had a fun week.
Yeah, you wanna
I,
chime in with stuff?
I guess my assessment is that this looked a whole lot like the December OPEX unwind, where we pulled back to a pretty major 50% retracement and played games around it for like 2 weeks,
Yes.
and then saw a nice big stiff bar off the edge of basically a failure for sellers to take the market lower into the next auction zone. And it happened again here. If I don't have a chart in front of me, but
Yeah,
basically
I'm
between 39 and 50 or so.
pulling it up according to your narrative. Real quick, let me just welcome the people that are watching. Thanks for joining me this weekend. I do this every Friday at 4 p.m. I just like to talk about the markets, and what I like to start out with is a little bit of market recap. Talk about what happened this week, maybe a little bit of speculation on what's going to happen in the future. And then we'll talk about a topic. Today, I want to talk about some futures day trading, some really cool price action this week I think people can learn from. So, we're going to start with S&P futures, like we're talking about right now. So let me just follow up on what he was narrating, just to go back in time a little bit. So what we're going to look at here is S&P 500 futures, and I'm going to get to the gold that you wanted to look at here in the chat in just a second, and also LNG. So what happened back in December was we had on the 13th the CPI, Consumer Price Index, that created a high. Now this actually set up a trend from October, which was the CPI announcement in October, which created that low, which up until now has been the low of the market for 2022. If you look at every stock out there, pretty much October was the time to buy in hindsight. But we created this trend from October to December, and then just like we said, at about 38.40 on S&P 500 futures, which translates to probably roughly 384 SPY. A 50% level was created, and then December, through the month of December, up until the end of the year and the very first days of January, price just hung around and fought that level. Ping, 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 ping. No real solid two bars closed on either side. Well, actually, excuse me. Let me back up. One of the things that I like to look for to know when something's fighting like this is look for two candlesticks to close, and then you can say better than anything else that it has broken the level. And in December, we didn't get two closes below it, and it just fought it for about 2 weeks there. January the 5th closed below it, and then January 6th, big rise above it. And that really launched us into the January trend. And that January trend had a slightly higher high here. So we still have that major level around 38.55, but the January trend itself, low, let's call it December the 22nd, to the high of February the 2nd, this level right here, 39.98, that's key. Been watching this for the last 2 weeks basically. Let's call it 4,000 because that's the nice psychological number. And so last week it hit it, held it, closed below it on Friday of last week. Monday, opened below. Tuesday, pushed up against it, could not break it. And Thursday, got a little fake out to the downside, which matches with something NASDAQ did, which we'll look at in just a second. And then Thursday, still held below it. Looks like a little low sweep in there. That's when NASDAQ hit its support. Look at that in just a second. And then today, rocket emojis abound. Big old green close above it. But we need to see what Monday does. You got anything to add to that?
Example of why we look, at least I look for confluences between NQ and NES, NASDAQ and ES, because it's hard to tell who's in charge. And this is a good example of ES was below it, playing games, NQ just touched it, really just touched it over my head, and that was all.
Yeah.
So it's good to have multiple charts.
You're roboting a little bit, but I know what you're trying to say. Yeah, Nasdaq is. I just pulled up Nasdaq right here on the screen, and that same time frame, that same January trend, from January the 6th through February the 2nd, the big rise we had here in the first month of the year, that came down perfectly and touched. That's where the bear touched you. 11,850 Nasdaq futures, or I guess if we looked at QQQ for those that look at that, let's draw that up from the low to there. And this is why I like using the futures a lot better than like QQQ or SPY. First of all, they're open not 24, but 23 hours a day. Just a little bit better of capturing that after hours price action. But the Thursday little wick down that we had on S&P 500, little fake out, was really just NASDAQ hitting its own 50% level. And if we go down and look a little bit lower on the 30-minute, it was basically in the European session of Thursday night. 3 a.m., poked it, couldn't beat it. 5 a.m. Eastern time, and then it launched off of it on Thursday morning at the open. There's an interesting little setup, which I'll look at here in a second with futures. Excuse me a second. But a nice little breakout there at the bottom. So, yeah, that's I think like what you're saying. If you're roboting, keeping both up at the same time. I like to look at S&P futures and NASDAQ futures. I don't have the attention span of squirrels like Aimer, and I can't look at
That's me.
oil and what.
That's me. Lots of charts too.
Yeah. Well, I don't know how you trade mostly off your phone still, though. I don't see how people do that.
Oftentimes with the new job, I'm doing it off the phone, but I basically do my homework the day before with volume profile placements, and then I just look for, places where I'm willing to take some risk, which isn't really ideal. But and hey, I know you're not. I'm not really a diagonal trend line kind of guy, but if you draw some diagonal downtrend lines on like SPX and ES, that pullback at the same time NQ hit its 50%, we broke above that downsloping trend line from the past year or so, from January 22, and we backtested it from above. I'm not a big diagonal guy, but we talk about a confluence between that 50% NQ retracement and ES hitting that spot. I mean, that was a spot for a lot of reasons. That was a spot.
No,
That's why
I see it. Yeah, I mean, if I'm like you, diagonal lines, I don't like them because people tend to redraw them. But you're right. Here's the thing: if you ignore the December spike, like if you just say that spike is not real, then you can say, okay, it matches from the high to the March high to the August high, and then we're going to ignore this December high, and then we're going to say, it came down and hit it.
Yeah,
so
that's why I said SPX. It's cleaner on the cash index, but it's a confluence thing, right? I would never trade that by itself, but starting to line up with that NQ 50%.
I mean, when it works, it. Are you talking about the Nasdaq? Hold on.
No, the ES has the trend line. But
okay, so ES hit the diagonal when Nasdaq was hitting the horizontal.
Yeah, okay. It was too much of a coincidence.
I mean, I don't know if I'd bet a house on it, but yeah, I mean, when it works, and it works great, doesn't it? Because you can go back and draw the line.
Straight out of March.
Yeah. So, really, Monday is going to be really super important. I mean, that's a big bullish green bar, but it could still come back down to close below 4,000 Monday. Anything could happen.
I think as long as you defend 40.35 into Monday, we should probably see 40.80 at least on this push. It's my
435 because that's basically the high from little swing high from last Thursday.
Yeah, this is the edge of the current auction zone basically.
Mm-hmm.
So we're like in a new auction if you go by auction theory stuff, market profile stuff.
Mm-hmm. Yep. Well, I'll be looking for some short-term opportunity. Like I said, I was in that long from yesterday, but I cut it short when it started getting choppy in the later morning. And it's one of those things, just hold on to it. Would have been fine. Could have, should have, would have.
I was going to ask if you were still in it, then I saw you cut it and decided not to ask.
Yeah.
Oh, no.
Well, I
Oh,
would have. There's no reason for me to not have cut it. At least, I would think what was it about 11 a.m. Because of started kind of chopping around and just the rise we had at the end of the day of Thursday. I don't know what that was. I mean, there's still some buying going on. I mean, who
I
knows?
saw that as a look above and look below and fail kind of situation, right?
Mm-hmm. Well, there's a
Bears
real
had their chance and they failed, and so it has to
yeah.
traverse to the other end of the auction, which really was 39 674 or so. And
Mm-hmm.
once they couldn't keep it down there, we were going to move into a new auction. It's kind of the thought process.
Yeah, and then the price action this morning, which I know that you got at 4,002. I mean, it's pretty clear, that daily that 4,000 level, which it broke, and then dig down to the 1 minute right there at the open, right at about 10:06, comes down and pings that daily level, and then rises off of it. It's just a nice little low sweep, but of course, it didn't do what I wanted to see, which would have been like little Tinkinson recaps. It just ran right off of it. So,
Yeah, they made it. It's hard. It's hard to buy that trend day continuation after we've been getting dripped down for weeks, right? Like that's the.
oh, I
I mean,
can't. Well, I
I got
can't. Like,
multiple times trying to buy the dip. I was waiting for this, and I
yeah,
took cuts trying to get it.
but that's what works for you. See, I just can't bring myself to jump into what everyone else is doing. That's why I didn't make anything on Tesla going long today.
You know, that was a tough one too because it just gapped down like 9% one day. It's so hard to
Yeah.
flip your mindset for a day.
So with Tesla, the discussions we've been having trying to cheerlead it and stuff, and those news articles from what was it yesterday, where Tesla was down because of Investor Day, which it was down like what 9% or something, and so people were like, the financial media is struggling to give a reason why it's down. Well, what's the reason it came back up? I mean, there is no reason. I mean, the reason is it's been pretty obvious to me for a few weeks that we hit a major level. Now, is it going to come all the way off this level into a full retracement? I'm of course short, and I'm trying to get to 160, but who knows? Maybe I shouldn't be betting against Elon. I always said that. Don't bet against Elon.
I think you got to bounce there just because the market got to bounce. And I'm not. I mean, although I like it over 196. I'm not convinced it's recaptured enough yet.
Yeah, I mean, it made a lower low in this consolidation, but at this point, based on the price action we've seen market wide, I mean, we could just easily enter into like a 186 to 210, 215 range right here and just stay in it. And so we're literally at the 50-50 mark of this range. I mean, if it going to go down or go
Thank
up.
you, buddy.
So, all right, let's jump into some other stuff. People have been posting, and then if you got anything, by the way, if you're just now joining, thanks for spending Friday with me. I have a Discord. I don't charge people for it. I just have a community. That's where you hear us talking on there, where I live stream it on Discord, YouTube, TradingView at 4 p.m. every Friday. I've got something to look at. Post it in the chat. That's the plug. All right. So gold, XAUD USD. For you, Mashtoy, what I'm going to do is I'm actually going to look at gold futures. I'm going to re-educate myself. So let's make sure that's basically the same thing. XAU USD is going to be what you'd trade if you were using a Forex broker. And right now it's at about 1854. So it's basically gold futures. So if I'm going to, I don't ever trade gold futures, but if I was going to, that was what I would use. It's just the GC. So we'll look at that because it's already on my watch list. So this is falling off from hitting the resistance at 1975. I still, from a few weeks ago, I've got these levels already marked off. I think probably you're going to see it traverse. And it's going to continue down from this high down to really the first support level here at 1800, let's call it, because that's going to be is the 50% from the November up to the high of February where it really fell off. So That would be the first level where I would really want to see this thing start to hang out. But it's a choppy pattern. Who knows what it's going to do? It's just, I don't think it's a buy right now. I wanted to get a little bit lower down here. So that's what I'd be looking at for gold. I don't have a position on in gold right now. All right, LNG. Okay, is that light natural gas or is that stock? LNG. Is that Conair Cheniere Energy or is this the futures? Let's see, I'm going to assume since you said $ LNG, well, that doesn't help me. You want to clarify that for me? Look at it both. So the stock, TANX. What is TANX? The stock, LNG. Okay. All right, let's look at, I mean, it's trending bullish on, oof, that's a big bullish trend from March. I mean, it's one of those things that has done really well since the pandemic and did not experience a 22 pullback. Since I am not in this, I would look for a pullback to 104. Now, I'm not saying it's going to do that, but if you're in it, ride it. I don't see any reason why this trend has broken yet. Look at the weekly. You're just riding up that Ichimoku cloud. You came back and touched it 2 weeks ago, held it. That's a good sign. That's a good sign that you had a nice little healthy pullback, and you want to see this thing come up and break this high. The only thing that would really give you a warning, we actually have an example of it right here. If you notice, when you got this thing trending up, this is where I like to, there's two things that I trust. That's false breakouts and 50% retracements. And let's just walk through it because this is a really good example to teach from. So LNG, we're looking at the weekly candlesticks, okay? We don't need our 50%, and we don't even need Ichimoku really. So just looking at these weekly candles, a week put into a candle of price action is going to give you a lot of information. When you have a high or low, but in this case a high, especially like an all-time high, you got to think about it this way. People were buying this. In order for it to go higher, people need to keep buying it. And so when you top out and you make a high, you want to make sure that every high that comes after it is strong, especially when you have a big bullish trend like this. Your first warning sign this trend is going to end is going to happen when you have some people push it beyond that high, but then they can't sustain. So you had a high, major high in August of 2022. And then in September of 2022, you have your first piercing above it, where you have the wick of the candle. The high there was 178.62, but the close of that week was 167.25. Got back inside of it. And so, yep, thanks for stopping by. Now, as the weeks went along, you had actual closes above it, but that was your first sign. And then you had yet another all-time high breach. So notice what's happening as this trend goes along. This is giving you some slight warning signs that this trend is starting to weaken, because think about it, if it's a really, really strong trend, and this is exactly what happened in Bitcoin, October and November of 2021, you want people to keep buying it. You want people to keep pumping this thing up. And so even if we had responded to this, maybe taken some profit, sold some calls, whatever, at this level back in 2022, yes, it went higher on us, but those failures, boom and boom, those failures to push higher with closes was what signaled the pullback that you got to here. Now, like I said, if you're a long-term hold on this as we come into February of 2022, I mean, this has not broken the longer bullish trend, okay? But what you want now that you've gotten this rise in these last 2 weeks, is you want let me draw it for you, just to visualize it. You're going to want a big green bullish bar. Let's make that background green. Opacity. Boom. Okay. You want a bullish bar to get back above this last all-time high. If you get this in whatever form it happens, you're good to go. But so often do I see you see this all the time, no matter if it's a stock, if it's crypto, if it's S&P futures. Let me see if off the top of my head, is it Bristol Myers? I think that was one. Yeah, so Bristol Myers, which was one that I was in. I've still got a runner in this, and the reason I'm remembering it is because I myself didn't even follow that rule. I was able to pick this up back in August of 2022 around the 68 level, and took some profit on this leg up. But here, where you had this all-time high from June of 2022, you had this bar right here. Let's go back in time just so we can visualize it. That week of November 2022, come up to that all-time high, break it intra-week, and then close solidly back in it. That is a warning sign of your bullish trend. You got to pay attention to that, me. And otherwise, even though you have a smaller position, as I do, now you're forced to sit here and wait for it to come back to that support that you got in on it. And I'm basically banking on this holding the same support, basically maybe coming back to test it again, just kind of riding this out. But that is why these things are so important. Now, yes, a little bit later, you may get another sign that tells you this thing's bullish. But just let's think about it all in the scope of time here. If you had gotten out on that first sign, that first close after the false breakout, you'd be a lot better off than you would be today. So, and again, I'll use this to segue into crypto market analysis, but Bitcoin, this was the key back in October and November of 2021. This is why I raised the red flag, trying to let all my friends know that, look, I know you guys really want this thing to go to 100K, but in order for it to get to 100K, what you had to have at 64,829 is this week of October the 18th needed to have a big green bar. Like this bar right here is not what you needed to get to 100K. You needed a bar that looks something like this. That's what you should have seen in October of 2021. Because if you look at the past, if you look at what happens when any instrument, whether Bitcoin or anything else, hits a major all-time high and then gets above it, it's solid. People are buying it. There's no question. It's not making you wonder if this thing is bullish or not. There's no hesitation. It just buys it up and it stays there. And then it just rips from there. Because if you're going to get people to keep buying this hockey stick of a chart, then the buying has to be strong. People have to believe if they're buying this thing at 24,000 that they're going to make 100,000. Just like if they're buying it at 64,000, 65,000, 68,000, whatever, they're going to get 300,000, which I remember that was a prediction back then. It was like, oh, it's 300K. Why is it 300K? Because it tells people that they're going to get 5, 6, 10 times their money. That's how you get people to spend on something that's gone up 1,000% in a year. I mean, looking back in hindsight, it seems kind of silly. And a lot of critics will say, well, we can look in hindsight and everything's obvious in hindsight. Well, you know what? It's obvious in foresight too, because this kind of pattern where it punches up against a major level and fails, look at this. Just etch this into your brain. We just looked at it with Bristol Myers, looked at it with that LNG. Draw a horizontal line at an all-time high and watch that weekly bar. Watch those weekly bars to close above it. You get a close above it, you're golden. You fail, watch out. Watch out. Even if you get out and it keeps going, you still did the smart thing, because this happens so freaking often. Eden, the slowdown could be since that quarterly report wasn't strong, but look at the latest quarterly report. Eden, I appreciate you recommending that, but I am just a technical trader. I could spend my time. I would honestly like to learn more about fundamental analysis, but I spend my time studying instances like this. And so these kind of events are just as useful to me, and I think they can be useful for everyone else, as reading, the balance sheet of a company. Maybe the balance sheet's better. Maybe Warren Buffett is better at what he does. But when companies announce their quarterly reports, you're still needing to speculate on future profits. You're still having to take their word for it that they're going to have a good quarter next. So again, there's a lot of guessing that still is involved in reading fundamental analysis. And plus, if I study one stock's quarterly reports, it doesn't really help me use that in another instrument. Whereas if I can look for false breakouts in cryptocurrency, I can see them in stocks, I can see them in gold. Silver. Silver is another really good example of this. Silver, I know I made social media posts about it then because a lot of my friends are silver bugs. They love silver. They really have loved silver for a long time. Silver has a long and storied history of trying to get people to buy it based on short squeezes. That's been a narrative for about 20 years now. When I did some research in 2021 when there was this narrative going around the week of February, the beginning of 2021, that there was going to be a short squeeze in silver. The message is go out and buy physical silver, demand delivery, because you're going to put hedge funds out of business that are short. And I've been doing this trading thing professionally for 10 years now. So I read the news every day. And I remember this same thing happening at least 2 times in the last decade before this. It's a meme. It's basically a meme that whoever out there wants to share it to get retail people to buy silver. But the key thing that happened here in February 2021, silver. Remember, we just looked at stocks, we looked at crypto, and here, boom, false breakout on silver at 29.91 in February of 2021, and that basically marked the high that we're now living in, all the way from there down to here. Okay. Now, while we're on it, I think it's interesting that silver has pulled back to a major, major level. Not only is it the 50% level of the COVID low to that high, but it's also the 50% level of this recent trend. 21 is looking like a very, very solid level for silver. So watch what happens around this level. Now, this right here is actually worth a trade. I mean, let me take a note. One of the reasons I do this is, well, first of all, because I like to talk about trading. I like to share what I know, help people, but also for myself, because people in the chat can ask me questions, get me to looking at things. So if you have any symbols to look at, post it in the chat. Also, I have a Discord. The reason I have the Discord is not to charge people for membership, but is to have a community with ideas. So next week, we need to look at silver. We need to look at some kind of way to try to play this level on silver, whether it's with the SLV calls. What I tend to like to do is something like a SLV call debit spread, maybe even buy SLV itself. I don't want to take a big old futures contract here, but yeah, I like this level. I like this level a lot. And you can get a good risk reward back up to the top here from 21 to 24. So that's what I'm going to look at next week. All right, let's go back to crypto. Sammy, what I was talking about was a false breakout as a sort of learning opportunity from back in 2021. What's up? Yeah. So this is one of the key elements of price action that I trust is when you have a big trend, it should go. If it doesn't go, you got a problem. That's really just what it boils down to. And so as a learning experience, I know a lot of people are like, oh, it's hindsight 2020. No. Look at this right here. Etch this into your brain because it's going to happen again in crypto. It's going to happen in stocks. It's going to happen in silver, just like we saw. False breakouts are signs of reversals. When you have, and it's really just as simple as looking at a candle to make a high, to break a prior high, and then a close inside it. It's a little wonky here because you had 1 week pierce it and close below it, but then of course that resets the all-time high. And so now then the week of November, up and did failed. All right. But where are we now with crypto? Well, just to recap, we actually got bullish. We are in a bullish trend on Bitcoin. Posted about this in January. Once we get outside of the Ichimoku cloud, that's one of the key things that I use to analyze Bitcoin is the daily Ichimoku, using the classic settings. Going back the decade plus, this works better than anything else I've found to know, are we in a bullish trend or not? And basically the rules for that are you get price above the cloud at the same time that the lagging span is above the cloud, and that is your confirmation for a bullish trend. If you get price above the cloud, but momentum is not above the cloud, like we had in the right before the FTX collapse, we had a little poke here November the 5th, but it never got that momentum out at the same time. And that would have saved you from jumping into something and taking the FTX collapse. But as price stabilized and got back up here on January the 12th, you had that confirmation for the bullish trend to start. Now, clearly, it has started to fall off, and I have been looking for pretty much the better part of the last month for us to get a pullback to a 50% pullback from somewhere. I don't care where it's at. I don't care if it's from another high or whatever. I'm looking for a pullback, and that pullback range has been somewhere around 20K. Where's the top? Well, it's going to be based on the whole downtrend from the big swing high in March. So the first level would be somewhere around 32. But if we want to maybe do a minor level, basically that swing low, and that 24 is what we're kind of fighting. But we've already closed above that a few times, so I don't think that's valid. So again, the levels that I'm looking for in the longer term are 20K and 32K. And what would be ideal, what would be an ideal setup if you've missed getting into this bullish trend is a pullback to 20K. I know a lot of people are like, oh, I don't want it to come back to 20K. I bought it at 20K on the run up. Well, this is just a good level. Okay, it's a good pullback level. And at that point, I would look for it to rise up to the resistance right there. It could do this number as well, but what I'm saying is this pullback to 20K would represent an opportunity for me because you're getting a full 50% pullback off of the trend. It still has a chance to remain bullish as long as that 50% pullback happens quickly. The rules still apply for a bearish trend. In other words, if we get price below the cloud here at the same time the lagging span gets below it, which is kind of getting in the danger zone as this cloud rises. The reason it's getting dangerous is because as the cloud rises, it makes it easier and easier for this price sentiment to flip over to bearish. So for instance, if we were to get a big bearish minus another 5, 10, 5, 6% this weekend, I don't think we're going to, but who knows, it's Bitcoin, it could happen. If we get it to hit in the next few days, that's actually going to be a good thing because that means we get down there before time has passed to get our momentum out as well. So we won't have that confirmation that it's a bearish trend. But if we hang out a little bit longer and then we come down, then that's also going to make the lagging span go down, and then we have a chance to get out as well. By the way, if I'm ever going too quick or if I'm ever talking gobbledygook and you need an explanation, just stop me and just say, hey, what do you mean by that? I'm trying to explain it the best I can, but this is the sort of stuff that I've studied for many years, so sometimes I just rattle it off, but I'm here to teach. So, TLDR, 20K, if we hit it soon, it's a pullback. 20K, if we hit it later, it might be a flip to the bear side. We'll see. Next week, we'll be able to look at and have a better idea. Ethereum, we'll move on to that. And then we'll start looking at some other stuff. Ethereum has been hanging out. And what's interesting about Ethereum is it has actually been holding its pre-FTX high, 1678, and that's what it has been fighting this whole time. It's been fighting tick, 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 tick up here and just hanging out. It also has a pullback level. Do I need to update this? Let's see. Did we make a new high since I drew this last? There we go. So the pullback level for Ethereum is 1408. Let's call it 1400. So if we can get a pullback to 1400, that's a good buying opportunity. But what it looks like it's going to do is higher highs, higher lows, just maybe consolidate inside this range a little bit longer. Kind of like what Tesla's doing at its level. So the instrument that's actually respecting resistance is Ethereum. And of course, if we're looking where can Ethereum go in the longer term on the upside, well, the first major resistance is going to be at 2200, and that also matches up with the swing low of January of 2022. So that's a really solid level, 2200 Ethereum, but got a little bit of room to traverse there. Again, just like Bitcoin, would like to see a pullback low to swing up to it, but that would be my bullish case there. Excuse me, my bullish entry case. A full 50% pullback as long as it happens within the right time frame. If it takes too long, then we're actually starting to roll that sentiment over to bearish. So we're getting into the point here where, believe it or not, these big minus 5% moves are a good thing. They're a good thing because it means that if we get a really sharp down move really soon, we can hit a support and then we can bounce off of it. But if we just kind of hang around a little bearishly for the next couple of weeks, that's sapping people's enthusiasm. You know, a lot of people were very optimistic in January. I know a lot of people that think, okay, that was really scary. 2022 is over. Now we can go back up again. Now my bags can inflate. But unfortunately, history is not on your side because crypto winters do not last a year. They just don't. They haven't in the whole history of Bitcoin. They tend to last anywhere from 18 months to 3 years. Now, we'll be coming up on 18 months here pretty soon. But you have to really think about a couple of things. Let me see if I can pull up something real quick because I went to this friend had a meetup where he talked about market regime change in terms of what's going on with the market broadly. Let me pull something up. So Fred, 2-year bond. Okay. Yeah. Just looking at the 2-year bond yield. Let's go all the way back to, let's go back further. Let's go back to 1980. Yeah, okay. So why am I looking at this? Well, let's look at it in the scope of time because this is what dictates the price of money. This is the 2-year treasury yield. It's very based around what the Fed sets their rates at. And of course, back in the 1980s, to combat inflation, the interest on this was at 16.69%. Actually, just out of curiosity, hold on. Fred 30-year Treasury. And how this relates to crypto, I'm going to tie it in. Don't worry. Bear with me. So think about this. In September 1981, before I was born, one could have locked in 15.19% interest for 30 years. How awesome does that sound today? Sounds pretty good. But believe it or not, I know from reading a little bit of market history, interviews with traders that were running funds at the time, there was actually very little interest in that treasury auction because people assumed, just like how they do in every market, that present trends would continue. They were in a era from 1977 to 1981, 4 years of hockey stick rising. I mean, look at this. Look at this. You see something like this. You see interest rates going up like a hockey stick, like a crypto. And I don't blame you for thinking, okay, well, interest rates are just going to go up forever because, man, this thing has risen from 9.2. It's doubled. No, not doubled, but it just looks that way to 15. So people assume that why do I want to buy a 15% yielding interest rate? I can get, I don't know, a 20% next year. Such is the mind of humans. Now back to this. Back in 2008, to save us from financial Armageddon, the Fed basically completed this regime of 0% interest rates. Okay? That's the world that we have lived in for basically the last generation, last 20 years or 15 years, roughly. Very, very low completely historically low interest rates. That has fueled a lot of the economics around everything. The valuation of everything has to be put into this context. Bitcoin was invented right around here. Yeah, right around here. Bitcoin has existed. It has been born. It has risen. Cryptocurrency as a whole in a low interest rate environment. What that means is people are not able to get safe returns. So what they have to do is pursue riskier and riskier returns. And cryptocurrency is a risk asset. I know a lot of people would like it to not be a risk asset. I know a lot of people would like it to be fixed, deflationary, store of value, and it is, over the long run. But we have to acknowledge that as interest rates go up, the market has basically changed. You can get 4% return on a savings account now, whereas used to you can get any. So would you rather put yourself into an asset with 100%, realized volatility? I don't know what it is, like it's huge drawdowns, up downs. It's been cut in half by 75% in the last 18 months. Or would you rather just earn 4% and take your risk that you're losing an extra 2 to 3% on inflation? Well, this article came out, I saw this on Zero Hedge today. So one thing that I try to read every week is One River Asset Management's CEO. I think it's, what's his name? Is it Eric? Go away. Eric Peters. I try to read his weekly letter that he writes. Not every week he releases it, but he's a pretty cool, eclectic author that you can read what he has to say. he timed the crypto market perfectly. He started a crypto wing of his hedge fund, One River Asset Management. He started it in November, One River Digital. And from just November of 2020 to the end of 2021, he made his investors about $1 billion, and he completely divested from crypto. He saw what was happening. I don't know if he was using the false breakouts or he just looked at laser eyes and saw the sentiment was a little frothy, but he called it right. And one of the things that he did was complete a sale of this whole wing. Like, how do you sell a hedge fund? Well, what he probably did was had a staff as well as maybe some, technical tools, some software they'd created in house to manage it. That's probably what he sold off to Coinbase. And some people take the interpretation of this as, oh, look, Coinbase is going to own all this institutional crypto holdings now, which that's what they said. But I look at it a little bit differently. This was a chance for there to be institutional investment in cryptocurrency, and it's actually leaving. They're actually taking their, they're actually, hey, you can have it. We're leaving the table. And I've been to a couple of crypto meetups where people express their feelings openly, and they really lament the fact that, there's not more institutional involvement in cryptocurrency. Because if the institutions would come in and buy crypto, then everyone that are holding bags, their bags would be lifted. But that's not happening. And it's not happening because crypto doesn't really produce anything. Like, they say that crypto is the start of the internet, or analogous to the beginning of the internet, where we don't know what it's going to be used for in the future. Well, 14 years into the internet, we were sending emails, we had some online databases. I think we probably had we're talking about, like, if we count it from early 80s, mid 80s to the 90s, 14 years later, we had email, we had websites, we had ordering. You could contact your doctor and have a prescription filled in some cases. But in 14 years, there hasn't really been a business use case. And NFTs, okay, maybe for the collectible market, but it doesn't really produce goods and services. And so the valuation of crypto on its own merits, in other words, the ability to create wealth by providing goods and services, just hasn't come about yet. And so the only valuation that goes into crypto is the money flowing in. That's it. So the only way that crypto is going to go up, because it doesn't generate any value, is if people buy it, if people pump cash into it. And that's what we had in 2020 and 2021. But once people ran out of cash, once the money spigot got turned off, and interest rates rose, where now you can't take out a 0% loan to buy crypto, as many hedge funds like Sailor did. Well, the money's not there anymore. Now, that's not to be all dismissive of it. I still think that crypto is a wonderful speculative asset that people can make money on. But I don't think we're going to get that in institutional investment. Not for the same reasons that retail investors get into it. Retail investors get into it because of the hype. Institutional investors, companies, hedge funds, pension funds, they buy companies because these companies produce things. They are creators of wealth, not suckers of wealth, which is crypto. And I've been in crypto for over a decade now, and I don't like to acknowledge this because it's not like what I wanted crypto to become, but that's the way I see it now. So anyway, rant off. Fiat doesn't produce anything. Yes, fiat does not produce anything, but it has, just like Bitcoin has first mover advantage, the dollar has a lot of first mover advantage. The dollar also has 13 aircraft carrier battle groups, and lots of tanks and guns and companies behind it. And so while the fiat doesn't produce anything, the inhabitants of the United States produce goods and services that the rest of the world wants to buy. Therefore, they need dollars to buy it. Doesn't produce anything on its own, but that's just what we've chosen. Maybe it'll change, but I don't think it's going to organically change to Bitcoin just because it's better. I still have not found a person that can make an argument to me that economics, in other words, people would buy goods and services if they had a deflationary money supply. But that's a whole nother discussion. I think it's less about crypto and more about blockchain. Exactly. The idea of a decentralized distributed database and irrevocable ledger of transactions and data, yes. I think probably one of the most obvious use cases is some kind of a distributed storage, but they've tried to do things like that with storage-based proof of storage coins and things like that, but haven't really seen those come to fruition. The bottom line is we don't really know. We don't. No one. It was not obvious to us in 2021, which we'll talk about this too. It was not obvious to us, anyone, that in 20. Let's put it this way. Yeah. So this is Amazon. Does this look familiar? Hey, look at this. Remember that whole false breakout thing? This is Amazon on the monthly. Let's go down to the weekly. Amazon on December 1999. What did you have? You had an attempt to break the high and then a close back inside. Everywhere you go, you see this pattern. False breakouts. That's why I trust them. Anyway, it was not apparent to us in July of 2001 that a book selling website was going to take over retail. But at some point in the last 20 years, if you had decided, hey, look, they are doing big things, you still would have done okay. So at any point here, hashtag we're early. Now, that being said, one of the things that I've noticed about Amazon recently, this was a purchase that I made last week. Amazon, by the way, from the all-time low to the all-time high, has pulled back 50% to around about 95, let's call it. It's a good buy. Amazon's not going anywhere. And I've been waiting for this pullback. I jumped a little bit early in 2022, but got out and then reestablished it now recently. So, yep. All right, let's check through the chat. We're actually getting towards the end here, and I actually have a missed call that I've got to take. So we're going to start wrapping things up. If you join this late, I do this every Friday at 4 p.m. My goal here is to teach things like false breakouts, 50% retracements. These are the two things I trust for finding opportunity anywhere. I have a Discord. Link is below. Join it. I'm not going to charge you membership. Maybe I should. Maybe that would make people appreciate it and contribute more. I keep on getting told to do that. By the way, if there's anyone impersonating me, selling you memberships or copy trading services, it's not me. It's a scam. Also need to say that, unfortunately. It's a whole epidemic of scammers on Discord now, and it aggravates the hell out of me. All right, decentralized apps that operate with their own crypto coins. Yeah, yes. These are use cases, but I guess the question, the lens that I want to look at these as, like, what business use case does it satisfy? Like, email was obvious. You can now communicate letters with people without paying for a postage stamp. Okay, being able to order things online was easy. Like, can we use a blockchain to order something? No. Can we use the blockchain to send messages? Not easier than email. Doesn't beat that. Can we use a blockchain to send currency? Well, yes, but can we do it more user-friendly and cheaper than Venmo? No. You got to think about it. Venmo and Zelle, or whatever you use for instantaneous or quick transactions between friends. Those are very recent. We kind of take them for granted, but those were invented after Bitcoin. Unfortunately for Bitcoin and all other cryptocurrencies, fiat dollars beat cryptocurrency in the payment space. They just did. It's just better. It's not going to go up in value, like a Bitcoin holding would, like a Lightning Network asset. But as far as ease of use, speed, and low transaction cost, Bitcoin really invented that idea, and fiat came in and ate its lunch. I tell this story all the time. I paid 1 Bitcoin for a sandwich back in 2010. Happy to do it. Don't regret it one bit. It was fun. But the people I was at a conference with, the first Bitcoin conference in New York, a lot of the ones there that had been mining and had thousands of Bitcoin at the time, probably billionaires now, they paid in cash for their lunch. The other thing that happened was a line formed because it was so slow to process the confirmations for Bitcoin. So 10 years ago, 2 things I learned about Bitcoin. Number 1, transacting in it is slow and cumbersome. Hasn't much changed there. And 2, the philosophy was to not spend it. HODL. And that also translates into economics. What good is a currency if nobody's going to spend it? I don't know how you're going to replace the dollar doing that. So, anyway, yeah, Friday, 4 p.m. Could you do a quick review of 2 insurance companies? Yeah, get it in right now. I got to make a phone call. Let's see. Let me make sure I didn't miss anything. Shopify. Going back through my old stuff here. Let's see. Gonna finish the request. Yikes. So this is a sort of learning. Okay, once again, remember, looking at Shopify here. This is on a monthly chart. November 2021. Well, everything topped out in November 2021, but that pattern, that false breakout pattern, that is what you got to watch for. You really do. In fact, honestly, let's not even use hindsight bias. Let's look at this from this perspective, okay? So Shopify, it first topped out February of 2021, and then when did it do our rule for a false breakout? It actually did it even before that, but let's just look at it this way. The point is, even if you come back a month later, and let's say that, we looked at, well, actually, the high here, the high of February was 149.98. The close of July of 2021, 149.99. 149.98, 149.99. You're good to go. Good to go. Isn't that cool? 1 penny's difference, and you didn't break the false breakout rule. And then I think we had that November spike up, and that's when you need to be warned. And really, you don't need to be holding on this long. And that's the reason I try to share this. I mean, you can do better. Like, a lot of people criticize technical analysis by saying, like, oh, well, we can't, technical analysis doesn't work. I'm not throwing lines on a chart. I'm not throwing like multiple lines on a chart. I'm not throwing MACDs. I'm not throwing moving averages. I'm not doing RSI. I mean, you can do those things, but just really simple price action. And you think about it logically, people need to buy this thing. And then when Shopify pulls back to 90, it's actually worth a buy. But if you get a close, or even worse, 2 closes below that level, you're in what I call the valley of risk. The valley of risk is basically where you ask the question, when's this thing going to turn around? And the answer is, I don't know what to tell you. Because at this point, everyone that bought it in this run up is holding on with diamond hands, hoping that it's going to go back up. And you're just in a valley where this thing's just going to keep grinding. And here's what's going to happen. You're going to sell it, and it's going to go up, and you're going to be mad. You're going to hold on to it. It's going to keep going down. You're going to be mad. or you just leave it alone. Now, as far as where is a buying opportunity, you can look at it from this perspective. So find the low. And I haven't looked at this, so let's see. Okay. If you're not bag holding, if you're looking to possibly make an entry in Shopify, I'm not mad at you. If you look at Thursday, I know we're a little late here, but if you look at the trade in this context, so 40 is basically the 50% from the October to here. There's your pullback. And what you'd be looking to do is try to take it back up to retest the high, make it a 3-to-1. If it breaks below 34, get out. Get out. 50%. I'm going to leave you guys with this last one. This is cool. We talked about this about 2 weeks ago. AI. Now, AI is literally artificial intelligence, but it's also a stock symbol. This was brought to us by Splick, actually, in one of my live streams, 2 live streams ago, where we pulled back to this 50% retracement level of 2059. This week, isn't that cool? Pull back to that same level right there. If you're in this thing, now what you want to see, what do we want to see? We want to see a sustained breakout. We want to see next week. Where's my symbol? Draw. Yep, there's my new little. We want to see a big bullish candle, get above 31 and close above there. And at that point, we can see if that's going to be a pretty good run. But we've had our first and second pullback to hold that 2050 level, 20.5 level. That's key. That's key. So, something we talked about 2 weeks ago. So join us every week. Tesla. Tesla, again, 50% level. I know I've been talking about this on the Discord. This was a key level, 213. Came down and held it, broke above it, broke below it, and it is. I'm going to keep my TradingView idea live on it, basically tracking the price action. But yeah, it's still holding that 213 level in Tesla. I am short. So, all right. Thanks. Thanks guys for joining me. I've got to take this call, but I'll be back next Friday. Discord link below. Come join. Trade wisely. Have a good weekend.